So you want to run a business, but you don't know what business to start or have an idea for a new product or service. Well, here's actually an area where I agree with many of the YouTube gurus. They say instead of starting a business, buy a business. Now, I'm biased. I work in private equity, so of course I think that's a good idea, but private equity isn't always accessible to everyone. So in today's video, I want to talk about how to use an SBA loan to purchase a business. Now, I'm not going to get into how big the loan is or what the interest rate is going to be. That's easily researchable on the internet and whatnot. What I'm going to talk about is what people don't tell you about getting an SBA loan and some of the challenges and pitfalls to watch out for. Stay tuned. I do have 15 years of experience working in and around M&A, private equity, and I've also bought a business using an SBA loan. Actually, worked on 2 SBA deals that ultimately closed. What I want to do here is talk about some of the learnings that I've had are probably not going to get unless you've actually been through the process yourself. SBA loan officers really are business development folks. SBA loans are so lucrative for lenders that they have teams of people that are out there trying to originate more SBA loans. When you talk to an SBA loan officer, a lot of what's going on is really them analyzing at a high level whether it checks all the boxes that their bank requires for a loan. What's the loan size? How much is the down payment? What do the historical financials look like? What's the structure of the transaction, et cetera, et cetera. Just remember that there are going to be certain things that the loan officer is looking for that are going to be very important that they might not tell you right out of the gate. I would say the first one is what debt service coverage ratio they are looking for. Debt service coverage ratio is really just how much cash flow you have to service the debt. The higher the number, the better. What I've seen is that a lot of SBA loan officers like at least a 1.5x debt service coverage ratio. So that's why I've always kind of targeted 1.5 to 1.75. But that's one example of an important criterion that a loan officer is probably not going to tell you about. The second area I'd like to talk about is whenever I was working with different SBA lenders trying to get these loans approved, very common that I would hear, the SBA doesn't allow that. And I'd just be thinking to myself, well, that's weird because it sure sounds like from this other lender that the SBA does allow that. And so ultimately what I did is I started just going to the SBA SOP directly, which you can find through a Google search, and reference the specific sections that are talking about the topic that I was curious about. Through that research, what I found is that oftentimes what the bank will do is they will say it's the SBA allowing it or disallowing something, and really it's a bank practice. Sometimes I'd talk to lenders and they say, well, no, you can't really do that. The SBA frowns upon that, et cetera, et cetera. That's not really the case. I mean, it's got to be, the seller note has to be structured a certain way, but it is absolutely allowed by the SBA. It just might or might not be pushed by the actual bank. That's a clear example of where it's not a SBA thing that's limiting it, it's the actual bank that you're working with that is limiting it. Presumably, as part of your negotiations and whatnot, you're going to negotiate a normal amount of working capital based off of historical practices is kept in the business. However, it probably is going to make sense to have a range, a working capital line of credit. We have working capital lines of credit in literally all of our businesses. So I would strongly encourage you actually to have that in place. Typically, whenever you're working with a senior lender, they're more than happy to place a working capital line alongside their senior note. However, a lot of SBA lenders are oftentimes different than that. In the first deal that we did, our SBA lender just said, listen, we don't want any of your deposits. We're not going to give you a working capital line. All we're doing is the SBA loan, and you're on your own for all this other stuff. So actually what we had to do is we had to go to another SBA lender and get our working capital line through that other SBA lender in order to have the working capital required to operate the business. It's not a terrible situation, but again, it's just something that you really need to think about and develop a plan for early on in the process so that you're not getting close to close and you go to your lender and say, okay, what are we doing for working capital? And they say, sorry, pal, you're on your own on that one. I mean, what I will tell you is that, I mean, it is a breeze. There are no covenants. I get a notice, once a year, tell me they need me to send my tax returns, financial statements, et cetera, et cetera. I mean, it is really a pretty easy process. So if you can stomach all the additional paperwork and the personal guarantee, then what I would tell you is that it really can be a very good option if you want to purchase a business. How does it make you feel about using an SBA loan to purchase a business? I know many people are gonna say, oh, I can't do the personal guarantee, I can't do the personal guarantee. Well, unfortunately, we've looked at a lot of different loans, and whether it was SBA or conventional, you almost always have to put a personal guarantee on it. If the personal guarantee is that concerning and whatnot, is buying a business really for you? Let me know what you think. Have you purchased a business using an SBA loan? Do you have any experience with the program? Let me know. Love to hear from you.